State of the world of rates and currencies. I'm joined by Saruhan Hatipoglu, who's the CEO of Barry, which is Business, Environment, Risk, Intelligence. It's good to see you. Welcome to the show. How much of this rate talk and all this stuff is related to the strength or the weakness of the U.S. dollar?
Well, Stockholm Syndrome. That's what Fed did. Fed hijacked investors, and then we fell in love with it. They keep talking about it. Hijacked. They hijacked it because we're relying on every single word that they say. Week and a half, I've been talking with clients, and they're asking me, what does patient mean? Are they going to take it out? They're not. What are they going to do?
It means to wait for a long time.
Exactly, right? The dictionary definition. So what they did today was they took it out, but they said data-driven. So data-driven is patience. They just took one word out, but added something else in there. And
why does it matter? Why does it matter whether they raise in June or May or April or January? I mean, they've already said they probably will raise rates. It's a matter of which particular month. Why are we so obsessed with it? Why are investors obsessed with it? Why are your clients worried about it?
Because if they make a mistake and introduce this earlier, incrementally, but still earlier, it will continue, right? It's going to go up.
You mean it's not just one rate hike? They're going to keep doing it.
Definitely, they'll keep doing it. But if they make the timing wrong, then we're going to have a lot of problems because the U.S. dollar is strong. So when the interest rates go up, it is going to get stronger. And we have disinflationary, almost deflationary pressure on the economy, and you don't want to raise rates at a time like that. So you have to be very careful.
So the markets, Michelle's talking about it, was down before the announcement, and then right before it, it spiked up, and after the announcement, it went up even further. So obviously the markets liked it, and I have a feeling it has to do with some of the words that were said in the statement, which I'm referring to some of these dovish comments, meaning that they're going to watch the data. But she also went on to say in the press conference that the data hasn't been so great. The consumer is not in perfect shape. The job market still has a ways to go, even though it's getting better. And maybe did those comments about sort of a weaker U.S. economy, is that what people are happy about?
Bad news is good news. Exactly. Stock market went triple digits. Look, the last month and a half, we've seen triple digits, ups and downs consecutively just because of this.
But here's my point. If the news stays like this, so next month the jobs report is kind of okay. The following month, retail sales are just okay. Does that mean we have low rates so long as the data is bad, we're just going to keep having low rates forever?
No, absolutely not. I mean, they're going to raise rates this year. It's still probably going to happen in June.
But she's going to watch the data.
Do you know what she did today? She talked the dollar down. That's what she did. Because
yeah, we saw the dollar drop.
Exactly. A couple of words, that was enough. Dollar was down. Now, we don't want dollar to increase at a time when the economic growth is still uncertain here, right? At the same time, she's not sure what's causing this restrained price growth. Is it the strong dollar? Is it low energy prices? Because look, in the 1980s, when there were low oil prices, economic growth was boosted, and what did the Fed do? They were very happy with it. So as soon as energy prices started going up, inflation at 5%, because Fed took its eye off the ball. They don't want to do that. They're being very careful.
Around the world, the dollar, back to the whole currency issue, who's most worried about this dollar being strong or weak? I mean, who does it impact the most?
Well, almost everybody. Let's look at developing countries, emerging markets. Their currencies, almost all of them, with the exception of India, because they're doing structural reforms really well nowadays, their currencies were affected. So there's inflationary pressure right there. China, $1.1 trillion denominated debt. Right? If the rates go up, strengthening dollar, they will have problems in paying this. Brazil, $300 billion. So emerging markets are going to be definitely affected by that, but developed countries too. Europe and Japan will be okay because they need this. But countries like Australia, Canada, Hong Kong, they're going to be affected.
I'm going to tell you a secret. Well, actually, it's not really a secret. You already know this. We talk all the time. There are a lot of people who have borrowed U.S. dollars. I'm going to borrow the U.S. dollars. I pay 0% interest rate. And what do I do with all this money? I throw it at China. I throw it into Brazil.
Sure,
I throw it in,
absolutely.
That's the carry trade, right? When rates do go up, and at some point, like you said, they will, the bank's going to want the money back.
Sure.
Then I have to get the money back, right? That means I have to sell whatever I bought. Is that something we should worry about? How big of an issue is that, or is that just blown out of proportion?
It is an issue because, look, total government and private sector borrowing outside of the U.S. has hit $9 trillion. That's 50% more than the level before the financial crisis. When the rates start going up, they will have a problem paying this back. That's a definite. And also, look at the U.S. current account. U.S. current account deficit is $100 billion right now. Half as big as it was a couple of years ago. That means there's less US dollars available outside for companies to get this.
I'm going to make you very
pay back.
unpopular with our audience right now. How much will the Fed raise rates by this year? How much will they raise rates by next year?
75 basis to 100 basis points by the end of the year. That would be a very hawkish way of looking at it. And I think they're going to start doing it in June. If not June, definitely by September, we will see rate hikes.
All right. You're now very unpopular. Saruhan, thank you very much. It's good to see you.